so that all my traders, all my students will see how I took this trade, how I was able to find my entries from the higher time frame down to the lower time frame. So today's trade, I'll be doing a breakdown on this Australian USD trade. This is a trade I took on 15-minute time frame, but this analysis was not only done on the 15-minute time frame. I was able to do this analysis from the daily time frame to the 4-hour, 1 hour, and then finally picking my entries on the 15 minutes. So guys, let's dive into the trading view now and see how I took this trade. So what I'm going to do is we are going to do a replay. So let's check where the trade was. This was currently where this trade was at this moment, guys. So I'm going to do a replay from here. This was where the trade was when I did this analysis. This was simply where it was. So let's go down to the daily where I started the whole stuff. So if you look on the daily, guys, what you simply see is very simple. And this is my way of trading. This is the way I trade. I trade with this mechanical method, a system that is repeatable, a system that once you know how to trade with this system, it works for you 100%, right? So I'm going to give you guys an example of how I find entries. So right now, if you look at this trade here, what you will see on the daily time frame is this. So let's look at the bigger picture, because you always want to look at the bigger picture when you are doing your whole analysis, right? So definitely you see that price is in a downtrend, right, respecting levels of supply, and we see this level below here. This was where we found demand that then drove price to the upside. So looking at price here, you see that price traded from this demand back into the supply. The reason we've seen this trade now, price is pointing to the downside. As you all can see, price is pointing to the downside. So we have this whole move to the downside. And then looking at price, I'm expecting price to do what? I'm expecting price to come all the way into this demand zone here, because this is where I see that massive buy to the upside. And now for this reason, this becomes an open imbalanced level, and this then becomes our last candle before the impulsive move to the upside, which simply means that this is an area of demand. And then this is also an open imbalance, which means price must definitely trade into this demand to fill up the imbalances, mitigate the demand, and then price can then continue to any level on the chart. So after knowing the trend direction, and the next thing is to look out for the market structure, which I often do on the 4-hour time frame. So if you look at the market structure on the 4-hour time frame, on the daily we've already seen what we want to see there, which is the trending direction. So on the 4-hour now, areas of what price are doing and areas that price are reacting from. So if you look at it very well, this green zone is our consolidation, right? And then these red zones up here are the supplies, right? I'll show you guys how I was able to come up with this entries, right? Now, all these are confirmations of why my trade was taken, guys. Put this into record. So if you look at it, let me say I want to do a replay from here. I'm going to cut it from here. So in this kind of movement, right? So let me tell you trades I love to take. My kinds of trades are trades that are like this, right? Let's say, for example, we have a trade like this. These are my kinds of trade. right? Price will consolidate, creating equal lows and then equal highs. So when price is actually consolidating, we see this as a what? As accumulation. Price is actually accumulating. So when price accumulates, the next thing is for price to do what? Manipulate and then distribute. That's why we have accumulation, manipulation, distribution, AMD. So now you see that price is creating equal highs and equal lows, which is what? Liquidities. There are liquidities sitting above and below every structural highs or every structural levels. And most times what the market do is what? Manipulates the highs. Let's use the low in this case. What price will do is price will do what? Manipulate the lows, take out all the early buyers, right? Take out the liquidity that was sitting below this low. Price will then manipulate the lows and then impulse to the upside, right? So when it impulse to the upside like this, what price has simply done is this. Price has created, we are going to mark this out as consolidation. This is going to be a consolidation because price was consolidating at this level, right? So definitely that would be a consolidation, right? And then after the consolidation, we saw a manipulation of this low because this was an equal low. So what retail traders normally do is every equal lows and equal highs are their entries, which makes it a level of what? Liquidity, right? So this is mainly what we always have. Then after price took out the lows, we saw the impulse to the upside that did what? That broke structure. So now we've seen a break of structure to the upside and then a liquidity grab from the downside, right? It's about time for you to know what I do next after I've seen these confirmations. This is the same method I teach a lot of my guys, a lot of forex traders, almost all my students. I teach them this entry method, right? It's very, very mechanical. You have to be someone that have patience with the market. You have to be willing already to look out for structures, right? So now you see prices then manipulated the low, take out all the liquidities that was sitting below this low. So that liquidity was what? That liquidity has been swept. Price is taking out the liquidity. Now liquidity acts as fuel, right? If you have a car, you want to go out somewhere to buy something or to check out on the friends, you're definitely going to need a fuel for you to make that move from point A to point B. So now one thing I apply into my trading system, my trading entries, is liquidity concept. So this liquidity concept allows me to know areas and levels where there are liquidities, which simply means that every Asian high and low, it's a liquidity for the London Open, and every London high and low is also a liquidity to every New York Open. So I use all these liquidity highs and lows and areas of liquidity in the market to use as a confluence, as more extra confirmations to my entries, right? So let me show you guys this. Now we have consolidation, which is accumulation, manipulation, and then what? Distribution. The next thing here is going to be a level below here, right? After the distribution, price impulses to the upside. So whenever price impulses to the upside, there's always going to be an institutional candle, an institutional sponsored candle, which is the order block, right? There's going to be an order block which is going to be left behind. That order block is what we call our demand zone. This is going to be our demand zone. So what I usually love to take trades off of this level is simply because price has taken out liquidity before creating that demand, right? And the next thing I want to see are imbalances imbalance is from the demand. That demand zone should be able to create an imbalance or give me a strong impulsive move to the upside, right? So the next thing I also look out for again when I'm in a trade is liquidities, right? So what price should be able to do is this, right? Create some equal lows and then equal highs, right? Take out this one, right? Come down, or even if it doesn't do that, but price should just be able to build liquidities below my entry level. So when price sweeps the liquidity, it then mitigates my demand zone and then tags me in. Then I expect price to do what? To impulse to the upside, taking out all the liquidities that were sitting above this high, and this high. So this is just my simple way of entries on every single trade. So right now I'll take you guys to the chart and give you a clear example of what I just explained, guys. So now looking at price very well, you see right now we are on the daily time frame, right? We are on the 4 hours. Sorry guys, I forgot we are on the 4 hours, guys, and we are doing some stuff here. So you see we have this accumulation. We are waiting for distribution. Now during the accumulation phase, we don't trade. We simply wait for the distribution and see how price is being distributed, right? It might distribute to the upside, it might distribute to the downside, but we want to see that expansion, right? After consolidation, expansion, which means after accumulation, manipulation, and then what? Distribution. Let's wait for the distribution. So if I play price right now, you see what price did there until it breaks that low, right? So simply looking at price, you see that price broke this low. This is a break of structure, right? Because this was a structure low and this was what? A structure high. And now this structure high has been able to break the structure low, making this high to be a strong high and this low to be a weak low. So now if you look at this price very well, you will see that we have a high, right? Which simply means that we have this impulse to the downside. We have this, right? This is what we have. We have this, and then we have this high that did what? Pulled back down here, and then we add a high here, which is liquidity. Of course, every high and lows are liquidities. After we sell this high, we then see the impulse to the downside, right? With this now, you see that there's an open imbalance right here. Now, we have a liquidity, we have an open imbalance, and then we also have a valid supply zone. So what's my expectation right now? My expectation right now is for price to trade, take out this liquidity, fill this imbalance, and then continue to the downside. This is for sell entries, right? So if we want to go for this entry, right, I'm going to pick my short position, right? My entries will be slightly below the lows. My stop loss will be above the highs in case price wants to take out more liquidities. So what I do is I don't always keep my stop loss like this. I always give it some breathing space, right? You give it some breathing space, right? So, and then you can do what? You can then target this low, right? You can then target this low, or you target this level, any of this high, or maybe you can do what? Look out to enter from the 50%, right? Up from the 50% entries, right? This is how I find my trade entries. So if you play price now and see what happens there, you see, price pushes up, takes out the liquidity, taps into that demand zone, taps into that supply zone, and then continue to the downside, right? The same thing needs to repeat itself, right? So if you see what we have here, we have this last candle. Let me take this one out. We have this last candle here, this last buy candle before the impulse move to the downside that took out the structure low, right? So that's our new what? order block. Now remember, this order block has similarities with this one, because right now there is what? Imbalance. Is there an imbalance here? Yes. There is what? Liquidity that was taken out before the mitigation, right? And then it also did what? Broke structure. Good. Now if you look at this very one here, you'll see similar thing. You see we have this last candle before the downside that has an open imbalance, right? And this high is liquidity. Of course, it's going to be a resistance zone for retail traders. And then we took out the structure. This is a structure low before the move to the upside, right? So now we expect the lows. We've seen the highs as strongs and we've seen the lows as the weak. So I'm expecting price to either pull back into this level to fill the imbalance, take out liquidity, fill up imbalance, mitigate this demand zone, and then play out. So look at price guys. Look at price. You see that this is a mechanical system that I use for my entries, and this is simply what I look out for on every single trade, every single setup, right? This is just like rinse and repeat, rinse and repeat. I analyze, it plays out, I rinse it and I repeat it. So what you can see is that price is building equal highs here, which is resistance, like I said, for retail traders. So they'll be taking their sales from this level. You know, price is giving them one touch, two touch, three touch. Actually, price is really selling, guys. But the main thing here is the price to take out this high, which is liquidity, fill up this open imbalance to provide a fair value for both buyers and what? Sellers. Then once it mitigates this supply zone, we expect price to do what? To continue to the downside. Now, smart money is more a waiting concept, right? You need to be that trader that have patience to wait, right? You need to have patience and wait for your setup to play out, right? You need to always, you see what we have there, guys. Let me just show you something. You see, price finally filled the imbalance, took out this liquidity. See the liquidity here, price take it out, impulse to the upside, fill the imbalance, and then taps into the supply, and then continues to the downside. Exactly what we see here, that's what we saw here. That is it, guys. This is a mechanical system, and this is the same system I use for my entries, both buys and sell, right? Now, let's continue. Let's play price. Let's play price. You see all this thing playing out over and over again. This is why a lot of my students are very fast when it comes to learning, right? I started forex trading 2022. Yeah, that was when I started forex trading, 2022. It took me about a year and a month for me to really get all these pieces of things together. It took me too many losses, right? But immediately I got hold of this knowledge. Immediately I understood how to use this thing, how to apply them, and how to use these things for my entries, for my exit. That was just what I was missing, and that was the real deal. So now that I already understand all these things, my students don't need to go through stress. They don't need to go through what I have been through. You understand? Because the knowledge is there. I just need to tell them, this is how we do it. This is how it goes. This is how it works. This is the reason why price moved from A to B, B to C, C to D, simply by looking at the market structure, projecting things that might happen in the future moves, right? You want to project like 100 to 200 pips into the future. So all right, guys, let's continue. So if you see right here now, price came back into this little demand zone that had an open imbalance, right? We saw a massive push to the downside that took out the structure low. Now this same setup this set here has a similar move like this, right? So my expectation on this trade right now is like this. Since price is reacting from a demand, I'm expecting price to impulse to the upside, to move all the way to the upside. I should buy to the upside. Price definitely needs to buy. Why should it buy? This is why I tell you that these things are very important. Smart money is a concept that opens your eyes to how price moves and the reason why price moves. No doubt. Now, the reason why I'm expecting price to buy all the way up here, right, is to fill up all this imbalance and mitigate this supply, then continue its move to the downside. Now, from the daily, what we saw was the price was respecting more of supply than demand. So with this whole understanding of price movement, right, and the intentions and reasons behind all their moves, I already know price should buy. So this is where I'm looking for a short buy to take a strong sell from this supply, right? So I need to buy the price to the upside to take out what? To sell from this supply. Now, this is how I find my buy entries. Immediately I saw that price have reacted from this level, right? I had to wait. The reason why I waited is I want to see this structure high being taken out for me to see the shift to the upside. So this is where I get down to the 1 hour time frame, guys. So if you see right now on the 1 hour time frame, we are within. This is where I want to bring in more of the concept of liquidity. You see, this is this purple zone, this red zones here. These red zones are some zones I mark out to know my Asian open and my Asia close. And then this white box you see currently here, guys. So this white box you see currently here, guys. This white box is a box that I currently use to know my London open and my London close. So up right here is the London open. Up right here is the London open, right? This is the London open. Up right there, which is liquidity, and then this is the London close. Then this is the New York. This purple box here, this is the New York. So this is the New York open, and this is the New York low, right? So what this high, New York, London, Asian high and low, what they simply do, they are liquidities. They are liquidities. London high are liquidities for the New York open or New York close, for New York to take, right? Why the Asian high and low is the fuel that the London section needs to take. So the London section will either take fuel from the Asian low to continue its move to the other side, or take fuel from the Asian high to continue its move to the downside. When the New York open, the New York open will do the same thing to the London section. You understand? And when the London section opens, the London section will do the same thing to the Asian section. The Asian sections and the London sections, right? They use each other's high and low as fuel to fuel their movements throughout the trading day, right? So my expectation right now is that, you know, guys, I love liquidity grabs, because whenever liquidity has been taken before my demand or my supply was created, I always go off of those demand very big, right? Or the supply very big. So my expectation is for price to come and take out this low and then create a new demand zone for me, right? So let's play price and see what price will do. So you see, price is creating more liquidities there, right? Price has decided to take out the high. This is during the Asian, right? You see that the Asian did not take out the London, it pulled to the upside, right? Now what do we see here? What do we see here, guys? Let me cut it from here. This is where the setup begins to look more interesting, right? This is where the setup begins to look like, yo, this thing is just moving the way I want. Yo, this thing is beginning to just make sense. You understand? So looking at it now, you see that when the Asian section opened, the Asian section decided to take out the New York high and the London high to fuel its own movement throughout its own section. At this level, this is where the London section opened, and this high here is the Asian high. So since that high is the Asian high, this low here is the Asian low. So now, right now, there have been so many liquidity in the market that is really going to make this entry superb. But I was patient to wait for all these things to show themselves. That's the game. I don't just trade. I trade when I see my setup. I plan my trade and trade my plan, right? I'm a professional trader. Let's continue, right? So if you look at this setup now, we have similar things, right? You see, liquidity has now been taken out. Immediately the liquidity was swept. What do you see, guys? An impulsive move to the upside that ended up taking out the Asian high. Immediately the liquidity above these highs was taken out. What next do we see? Price begins to do what? Come down. Price begins to come down. What's the reason why price is coming down? Price is simply coming down to fill the imbalance, because now liquidity has been taken below this low, so price will never come back to this low. Price needs to go high, right, to take out more liquidities, fill this imbalance here, and then mitigate the supply for us to do what? Sell. That's it. So looking at price now, because of this imbalance, I expect price to come and fill it and then react from this demand. If price reacts from this demand, then it simply means that I'm going to go off of the next demand, right? Because this simply means that demand is now in control. Before it was supply, sells, supply, sells. Now it's demand, buys, demand, buys, demand, buys again. I'm going off of it. So you guys will see exactly how I do this. So now we play price. Price now taps into that level, but price did not tap into it. Price started to build more liquidities, guys. Look at the lows. Price left the lows to build more liquidities, to bring in more buyers, right? See what happens here, guys. Price built this low just above the demand zone. This is more extra confluence that price will definitely come here, because price will need to do what? Take out this low and then mitigate this demand zone. You see, these are just my simple entries. You understand? Now with this confirmation, I have seen 3 demands hold and all the highs taken out, right? This demand hold, took out this high, took out this high, right? Price came back again to take out liquidities and reacted from this same demand and take out the highs. So what we now see now are strong lows and weak highs. No longer weak lows and strong high, but now demand is in control. So after this move here, that was when I scaled down to the 15-minute, right? And this is where I took the trade. This is where price was, because I needed to see a reaction to the upside before looking for entries, right? So if you see the moves here, price then moved to the upside. Once it gets where I did the analysis, I'll stop. Yeah, this is it. This is where I started to look for entries, right? And if you look at it very well, you'll see this same box, right? This box here. These are the liquidities I tell you guys that I use, right? This is London high, which is liquidity. I'm going to mark that out immediately for you guys. So I'm expecting liquidity to be swept, like I tell you guys. I'm expecting that liquidity to be taken out, right? Because that's what? New York highs. And then this is the Asian high. So it's now making sense, because there are too many liquidities to the upside right now. This is Asian high. I tell you guys, the red box is my Asian high. So you guys can see what I have here right now. This is what I have here right now. Liquidity that needs to be taken out. So at this price level, this high, this low, this white box is London. London took out the Asian low and then came all the way to mitigate this demand, left us with a nice demand zone, right? So my expectation is for price to come and take this level and then continue to the upside. But if you look at this trade, this was a 1 to 4 trade, right, with a 7 pip stop loss. But I could have just put my stop loss below this low, right, and then get a 3 pip stop loss and then a reward of 9, which means it would have been a 3 pip stop loss and then 9% win if I was risking 1%. Yes, I normally trade with 2 pip stop loss, 1 pip stop loss, 10 pip stop loss, 15 pip stop loss, 20 pip stop loss, but 15 pips is too big for me because I do more of confirmation entries than risk entries. So it allows me to use a smaller stop loss since I already know areas that price will not get to and areas that price will get to. So I would have done that, but why did I not do that? Now I understand that this is London low, and this London low is liquidity. So price might want to take out. Let's see what happened here. So you see what happened here. Price decided, New York decided to take what? London low for price to continue to the upside, right? When New York opened again, New York decided to take London low and the previous New York low for it to move all the way to the upside again, right? Understanding that New York will always take either London low or London high, I had to put my stop loss below that level. This level here was so if you look at it very well, this is where I put my stop loss below the London, so that in case price decide to take out the London lows, it will not get to my stop loss. This is the reason why you need to understand liquidity and how to trade liquidity, right? You need to understand the liquidity concept, because this is, you know, if you can't spot the liquidity, you become the liquidity. You understand? So these are things you need to understand when it comes to forex, when it comes to trading as a whole, right? So let's play price and see what price did. My expectation is price should fill the imbalance, tap into the demand and continue to buy to our TP, or come straight to take out this London low and buy massively, just as price has been doing, right? London boom, London, New York boom, New York boom. So let's play price and see what price did here. So price is coming down, price starts dropping, and it gets to our entries, and then you see it puts us in profit. It puts us in profit and then comes back to take the lows. You see what price did there? If I had put my stop loss below this low, price would have taken me out of my position. But I understand the concept of liquidity, and it helped, right? Look at it. Price would have swept this low before impulsing to the upside. You see, it took out this liquidity, and let's continue. Let's see how price moved. And price still did what? Take out the liquidity that was sitting above the New York high. This sounds easy, right? So what I want you guys to do right now is this. I want you guys, if you love content like this, I want you to do what? Click on the subscribe button. Make sure you subscribe, turn on the notification bell, click the like button. Reason because so that whenever I drop videos like this, you will be notified. Because this year I'm going to give you guys quality educations about my trade levels and all of that. We made money off of this trade. We made good money, good amount of money off of this trade. If you look at it right here, you see when I send the signals into the community, right? And I was sending them screenshots to let them know reasons behind my entries. You simply see that immediately price took out the lows, we saw the impulse to the upside that did what? That went on to smash our TP, right? This is a simple concept. This is a simple concept that I teach to my students every day. Now, what I do is I always send my chart setup into my community for my students to see exactly the reasons behind every single trade that I am taking. We made money on gold. We trade cryptos too, because this system works on cryptocurrency, right? It works on cryptocurrency. So we do trade cryptos. You can trade with anything. You can trade this concept with any peg. If you look at this trade I took on USD card, you can see similarities. Liquidity sweep, impulse to the upside, break of structure, came down to fill imbalance. My expectation is for it to tap into this demand and massively buy to the upside. Now, if you come to see the result that we got there, after that trade, this was the result, guys. This was the result. Now, this was the trade when it was running already in profit. I have to let my guys know that we are already in profit. You can still see when the trade went on to do what? To smash, take profit. It's not just by drawing all these things on the chart, it's by understanding the levels you're drawing all those things from. There are a lot of educational content out here in store for you guys. I'm going to be dropping them one after the other so that you guys can be able to learn and understand how I take my trade. So this was just how we took this trade today. So take absolute good care of yourself, guys. I'll see you guys in the next video. Make sure you study and stay up to date. Turn on the notification bell, click the subscribe button, thumbs up for your boy. Now, if there is any video you want me to drop, guys, drop it in the comment section. If you want me to drop any video on any topic, drop it in the comment section. Okay, I'll see you guys in the next video.